Everyone there? Anyone there? I'm just sitting here on my own, just checking if anyone's around. Oh, cool. Hey, cool. Okay, so I was going to start at 12. I was going to go till 1. I'm going to keep this relatively quick. I've got other stuff to do. So I wanted to do this to test the live streaming and at the same time just have a look at what's going on in the markets, because I think that there are some potential trade setups that are going to occur later. Hey Dan, how's it going? Cool, man. So, all right, let's kick off. Okay, it is being recorded anyway, so the recording will be available for anyone who kind of joins it. But let's remark on a couple of things. So I've got the daily on the bottom right-hand side, and so what I want to comment on here is that the daily, and I've marked this level. As a potential support level, and so I note that price has broken through that, but it doesn't mean, hi Richard, hello, or is it Richard? It's testing that as potential support. Okay, so apologize also for you guys who were listening yesterday. I said I had a webinar with ETX and it was somebody else, CMC. I looked at the wrong thing on my calendar, and I'm sorry, and there was no way for me to message you to go, it was the wrong one, I'm sorry. So it was CMC, it doesn't matter. Anyhow, I won't make that mistake again. So very quickly, there's a couple of things I want to show you here. Okay, so first of all I'm going to do this, and I'm going to edit it. Okay. I'll just extend it. Is that one? That's this one. Okay, so from this swing low to the swing high, we've got a 382 that overlaps with a nice round number, which overlaps with the previous high. I don't know what to do about the resolution, how to improve it. It's telling me now. Let's just see. Bear with me. To stream bitrate of 1000. I don't know how to change the resolution. Damn it. This is all too... It's all too complex for me. I'm getting old, man. I'm looking at the resolution now. So the output, it's 1152 by 648. I'm just going to see if I can change that. Bear with me. See, it's actually telling me it's 2048, so I don't understand. I'm going to have to look it up as to how to improve it. Output, bear with me. Video bitrate is too high, only needs to be 1000, something like that. The encoder, 64. Video. Video output is currently active. Please turn off any outputs to change video settings. Oh, okay, so hold on. So bear with me. It's complaining about this one. But I've changed that. Remove. Yes. So I've lost my desktop, so bear with me. I'm going to try to add this in. Video output is currently active. Just won't let me do it. Advanced video. You can hear me okay though, right? It's a hardware thing. I'm going to try something here as well. I don't know if this is going to help. Could make it worse. Okay, I'll tell you what I'm going to do. Let me finish this session and then I'll fix it. So the next time I go live stream, I'll fix it. Okay, let me just try and do that. It's not great. I apologize, it's not great. Sorry about that, man. Man, this is a bit of a mess. And then I have to bring back, I've got to move it back. Okay, just bear with me. Sorry guys. It's not meant to be this messy. Okay. Alright, so just bear with me, I'll fix it for tomorrow. Holy cow. This is a solid mess. Video output back to hardware. Apply. It's okay. Let's go back. Sheesh. Remove it. God damn it. Excuse my language. It's really not meant to be this. Okay, let's try this. Go back to the settings. Let's do this at, I don't know. Do that. Apply. Add. Display capture. Okay. It's still doing that. It's just weird, man. There we go. Okay, I'm back. Man, just a mess. I'm back. Let's do this. Okay, so let's do this. You should see me now. So you should see me again now. So basically the whole issue is this. The weekly is doing a retracement, and a shallow retracement would put it back into the moving averages before it continues to go on. So it kind of pulls back, heads off. Just, can you let me know that I'm live again and you can hear me now? Just if you can do that. I should be streaming. You should be able to hear me. Okay, cool. So, and the thing is, in order to test this, I have to live stream. So when you were like, why isn't this all prepared before he goes live? Unfortunately, I can only test it when I'm live streaming. So we could pull back to the moving averages. Then I'd get a bullish candle here on the weekly, and then it'll carry on. But at the same time, it's overextended on the monthly. So do I think that it should, why doesn't it just come back, test it like this, come back here, and then carry on? So why not just come back, test it, and then carry on? So basically, what makes the most sense, price could come back to an earlier Fibonacci level, or it could come back to the 382, which lines up with 1.15. That's the shallowest, like I think that's a fair retracement for it to make before continuing on upwards. If this is the case, if it's going to do that, the daily is kind of almost like an overextended head and shoulders. It's looking to break through this level. But there is no doubt that there's still support at this level. So what we have is this contradiction. We have the weekly could carry on from up here. But at the same time, I think it's also very valid for it to continue down, to retrace down to 302. And the reason I'm showing you this is because all the Euro charts look like this. All of them have produced a bit of a head and shoulders, and they're all looking to break support. And what that means to me is that if it does break through that, that is where it's likely to go. And therefore, we're likely to see the dollar index strengthen. So if we go look at the dollar index has produced, it's broken this previous low. So if I go full screen again, it's broken that previous high. So there were lower highs going down. We've now broken that. We've broken up through, broken the high, come back, produced a bullish candle, come down, produced another bullish candle. So the dollar index separately, it's looking a lot like Pound Aussie did. When I was looking at Pound Aussie on the daily, it looks like it wants to carry on up. And the next place for that to go to is 94, which would mean that the euro dollar probably go to 1.15. So basically that's my argument for why there's a valid reason why the euro might drop. When we look at the other euro pairs, here's a potential swing trade. So on the daily, price has pulled back, produced a bullish candle. So this setup here, for whoever followed that, is now here. Meaning, I will wait until today's candle closes, place my entry above it, stop loss below the low. Why is this a good, potentially good trade? It's coming back to a previous level of resistance, testing it as support, nice little bullish candle, stop loss below, underneath potential resistance as extra technical protection, entry above the high. But I've got to wait for it to close. Euro yen. Euro yen posted this trade setup. There's my head and shoulders. We've broken down. There is a historical level here which has acted as support. We could stop there, but I'm also potentially expecting it to go on to the next level. So this is a live trade that I have posted here. So on this link, if you want to follow it. So I like it because that was the trade idea. Then we have Euro Swissy, which is also messy but potentially looking to break lower. We have Euro CAD, which is very messy overall. We've got Euro Aussie, which definitely looks like it's holding on support and it might break through that support level. I'm just talking about the daily for now. Oh crap, and we've got this logo. Oh, I've done it again. I've got this AH logo that's sitting right where you want to have a look. I'll remove that. It's complicated. YouTube is not intuitive, and it's put it somewhere in my settings. Somewhere it's taken it. I'll get rid of that as well. So there's a level of support here. Lower highs. Euro could break through that. Euro Aussie could break through that level. Euro Kiwi. Also potentially heading lower. So Euro Kiwi, I did another trade on that website, which is here. Which is now pretty much at target. Okay. So that's kind of where it is now. Pulling back, bring my stop, trail my stop down to behind the high, and see if we can continue down. So your Kiwi's broken down lower. So let's look at a few others. Let's look at Pound Yen. So the reason I'm doing that is look at Pound Yen is heading lower on the daily. Look at that flat breakout I missed. I missed that. That was a beautiful, well, it was a breakout that I missed. So if anyone saw that, that was a good trade setup. Pound Yen. Pound Swissy, all the GBP pairs are looking very weak. Look at that daily potential swing. So here's another trade setup that can be updated to today's candle to go short. And all of this supports the idea of a stronger US dollar. So remember that dollar index saying it could strengthen? So you got that. Pound CAD will be the same. Pound Aussie will be the same. They're all offering potential swing trading opportunities, ladies and gents. So although there's not a lot happening on the day intraday today, there's a lot potentially happening on the end of day where price is potentially looking at swinging. So there'll be swing setups, which means that whatever trend we had yesterday we will probably go in the opposite direction tomorrow if the markets follow through. So that means that we're literally today we're in a kind of, that thing is switching around. And if you just have a general look, what I want you to do here is focus on this. Just look at these top 3 charts. It's just a mess. Like Aussie Swissy is just screaming, I'm a crazy person, stay away from me. Aussie Yen is trending lower, so there's a possibility there. It's generally bearish. Kiwi CAD is just crazy, it's all over the place. It's trending up on the lower time frames. I mean, on the higher time frames, but on the lower time frames, I mean to say on the lower charts. On the lower charts, it's trending upwards. On the higher charts, which is the lower time frames, it's doing that. This is also a bit messy, so Kiwi CAD, Kiwi Yen, potentially, it's just not that great. They're not all that great. CAD Yen, now look at this. So here's a good chart. Why? Because pretty much everything you look at is trending lower. So I like the look of Swissy Yen and CAD Yen. They are generally going lower, and you've got a confirmed downtrend. Look at that. That's pretty cool. So they have something in common. A lot of them have the JPY charts. So yen stuff. Okay, what's happening with gold? So another trade idea which I'll post onto that is potentially a momentum breakout to the downside, or an expansion, whichever one you want to call it, but also lower highs and potentially coming down to the 1907 level and then breaking to the downside. And then if it does, it's going down to 1800. Is it valid for price to go to 1800? Absolutely. Why? The monthly is really the answer to that. Here's our monthly chart. It's trending upwards. Do I think that gold in the longer run is going to climb? Yes, I do. Do I think that it's overextended? Yes, it's obviously clearly overextended. It's produced an indecision candle and currently another bearish candle. So what would be the shallowest retracement that the monthly could do? It's hit a big number. It's at 2000. I think a shallow retracement down to 1800 on the monthly is fair. That would be probably a 382 fib retracement. A 618 would bring it down to about 1600. Either of those is in theory valid, but if this is really strong, I think a minimum retracement to 1800 is valid. The weekly, however, the weekly in isolation looks bullish. And this is a classic contradiction. The weekly looks good, man. This weekly's pulled back. It's on a level of support at 1900. Produced a bullish candle. So let's look at the price action. Bullish candle, triggered the high, but hasn't followed through. So if it's as strong and bulletproof as we think, why hasn't it followed through? Then we've got another little bullish candle and another little sort of, now today's candle slightly bearish. So it's either consolidating before carrying on, like the euro dollar, before it's going to carry on, or it's trying to tread water and it's eventually going to, the buyers will just step out and it's going to fall through. So the daily is really the clue. The daily is, if gold is strong and it's going to carry on, why would it come back down and test 1907 again? So I say to you, if gold decides to come down and test this level again, maybe it's not as strong as we think it is. And if it comes down to test it again, it could very well be setting up for a breakout. And if it breaks to this level, after that kind of a build-up, it has to fall a minimum distance. And that minimum distance is probably down to 1800. All of it makes sense. Within the context of the monthly, the pullback to 1800 makes sense. What would negate that setup? What would negate that setup is if price instead came up and broke this high here. So if we break that high over there, 1993 call it, then price is going up to fresh highs. It has to get through 2000 first. It could, a third option. So option one, which I think is the first one, most likely, price comes down, breaks down. Alternatively, price breaks the high here and carries on up. The third option, which is the least likely, but could still sit within the realm of possibilities, comes up, can't break through 2000, and then comes back down and just resumes the same pattern and then breaks down to 1800. So 2 out of those 3 options imply a break to the downside. Probabilities, rationally speaking, in terms of just looking at your odds, plan A and plan C are both bearish. So probabilities are in our favor. And so in the meantime, I would just not trade it because I needed to clarify which way it's going to go. So I'll stay away from it. Silver's the same. So silver's going to follow through on the exact same thing. Then we look at oil. Okay, so oil. Okay, here's my argument for oil. So let's look at Brent. No, let's look at light crude. Is everyone with me so far? Is everything that I'm saying making sense? Okay. Oil's longer term trend is to the downside. It's a commodity, and same as with stocks and commodities, when the value drops low enough, people buy because it's cheap. They don't buy because there's a future for it. They buy it because it's cheap. So yes, there's an argument that says that if it's cheap, it'll keep going. But the reality as well is that it's downtrending. Prices pull back into the moving averages and to a fib level and to roughly $40, and it's produced a bearish candle. So we've got a swing high. So in isolation, that implies that the momentum is more to the downside. Okay. But the weekly doesn't really have, actually we have a high low on the weekly. We don't have a clear trend on the weekly. As far as I'm concerned, we don't have a clear trend. This was a clear downtrend, we don't have a clear trend on the weekly. We do have a swing low. So I acknowledge that. But the week isn't over yet. Week isn't over yet. So by tomorrow we could see a difference. The daily, this is what I was expecting to happen. I was expecting, the way that we work as technical traders, and I picked this up from Nick and all the guys that trade with precision, is ignore the news, ignore all that stuff, put in your levels, and then give, in other words, it's innocent until proven guilty. Give the market every opportunity to behave rationally. In other words, put in a level and go, my expectation is that the market will come back to $40, and which is previous support and a round number and a psychological significant number when it comes to oil, come back to test that level of support as resistance. And then that is one potential area. If it is going, so similar to gold, we have multiple outcomes here. We have the primary outcome, which is if the monthly is correct, the monthly downtrend is going to unfold. So in that scenario, what makes the most sense? Price falls through support, comes back, finds resistance, and carries on down. Which means, in theory, that where we are now is a potential turning point. They call this a hanging man. That's a potential hanging man, which is a potential turning signal. When you get a bullish signal, the bullish candlestick that looks like that at the top of a move, they call it a hanging man. So price could turn from here and head down. It could come back to a fib level, so there could also be a Fibonacci level. Doesn't matter, we'll go there. Okay, it's actually in that zone. That's what we call it. It's in the zone. Okay, so it's in the 618. If it's in the zone, it could sell. So it's also in the sell zone of the moving averages. It's in the sell zone of the Fibonacci. So there's, to me, there are acceptable reasons why this could turn where it is, though. So I think, and logically that will be between today and Friday. That's where it will turn. So if the weekly is going to fail, which would be cool, we will have between today and tomorrow, oil will drop. And it'll come down to like 38, back down to this level maybe, or further, and we will see the weekly candle subside. So even though it's a swing low, it'll finish bearishly. That would be ideal, because all of that would support the idea that the market's going to head lower. What would negate it? Well, we've got a swing low on the weekly. Price would have to finish right up here. In other words, it'd have to go back up to these highs. For me, in my mind, to negate that as a potential, as that would definitely be messing with the oil price. So basically, it's very simple. If price falls lower between today and tomorrow, the probabilities lie and it's going to continue down. If it doesn't, then I'm going to probably abandon that idea for now, because the evidence is weighing against it. The behavior is not in line with it. And then if we look at the indices, we have a similar scenario. So we'll look at S&P. The S&P has produced a lower high, and there's a level of support here. So we have a downtrend when we break this low. Specifically, we have a downtrend when we break that low. Okay. Now, usually when we get a downtrend on the daily, the first thing that I assume is that it's a weekly retracement. So if I go to the weekly, my first assumption is that it's a weekly retracement. So we have come back into the previous highs. So that could also end up being support. It is in an area where we could produce a bullish candle and we could carry on. So the weekly in isolation is bullish and it could carry on. So we've got a very similar scenario here across all the markets. We've got the weeklies looking bullish, the dailies looking bearish, the monthly looking bearish, or the monthly overextended. We've got this horrible thing, and that's why. So if the market is going to close bullishly by tomorrow or follow through, then that's going to continue. But if it is strong, if the market is so bullish, then why does the monthly is overextended? Is the monthly overextended? Hell yes. It's as far away from the moving averages as it's ever been. It's produced a bearish candle so far. We're past the halfway mark and we have a bearish candle. We usually get a bearish candle before we get a swing high. And it's overextended. So is there evidence to support reasonably a retracement? Yes. Could it carry on? Yes, it could. We've had it before where you get a bearish candle and then it just does another month or two and then it turns, but it is extreme and therefore 60% likely to do a retracement now versus anything else. But what would it look like on the daily? So the weekly looks bullish, monthly's overextended with a potential swing high. The daily has produced a lower high and could potentially break the low. So if we break this low, that implies the monthly is probably going to start to follow through. We're probably going to get more of the monthly outcome than just a weekly retracement, possibly. And if it breaks through there, then we'll have to see where it goes. Could come back down to the weekly support level. Could do that. And so the clue is really in the 4 hour as well. Watching that 4 hour, if we just go back to it, looking at it here, there's a potential, we could see what happens with support if price heads down and breaks through that. And that's the same for all of them. All of the markets are showing monthly overextensions on the most bullish markets with the potential to do a swing high. And the weeklies are looking good and the dailies are looking odd. So all of it is like, okay, what's going to happen now? If we go to the markets that aren't looking that bullish, then what I do find interesting, and this makes the case for the markets to be stronger than they look, the FTSE's holding. So if you go to the weakest markets, they're not really dropping. They're still holding where they are. If I go to the DAX is still up against resistance, but it could fail ultimately. Looks like a mess. We look at stocks, the Euro stocks, holding at resistance. They're all pushing at the top. Doesn't mean they can't fail. We look at the Asian session, the Australian one. The Australian one, ASICS, is looking bearish. Okay. It's got resistance up here at 6,150. Sorry about that. It's got a downtrend on the daily, and it's coming into a level of support. We could break through that. Excuse me. So a lot of that implies bearishness on the Asian sessions. Cool. And that is it, ladies and gents. Yeah. So CAD yen and Swissie yen, I like. The 2 hours becoming a bit overextended. For me, a perfect trade setup would be price comes back into 79.50, produces a bearish candle, and then I start trading it lower. Also, if at some point it comes back to test this level of support and resistance, look at that. That's beautiful. Let me just put that in. $80. If we can come back and test it on that level at 80, that's beautiful, which is up here, which is a bit far away. So that means what could happen on the 2 hours, the 2 hour could pull back into here, into this level, and potentially do another move down. But also at some point I do expect price to come up potentially to this level, and that would be on the 4-hour daily. There's a possibility. So there, you know, I think this is a bit overextended, so I wouldn't go into it just yet. I'd wait for it to come back to 79.50, see if we get a nice little bearish candle like that, set up, and then potentially trade it short. Swissy yen is the same problem. It's very overextended on the 4-hourly. A pullback on the 4-hourly would be great, but it is bearish, man. Alternatively, I could trade the 15 minutes, like I could, but I have to acknowledge consciously that at some point in the near future, between today and tomorrow, the 2-hour or 4-hour is likely to do a bit of a retracement back up into the moving averages. So I could take a trade on the 5 minutes or 15 minute to the downside, definitely because it's higher risk, because we're overextended on the higher time frames. Definitely get, you know, take profit at 1-to-1 to get my trade to break even. Take profit at 2-to-1 or 3-to-1. In other words, I need to acknowledge that I could trade it very briefly on the lower time frames, but it is now in overextended territory. The longer trend is really good. A 2-hour retracement, unfortunately, might not even be done by tomorrow, so it might have to mean pick it up again on Monday. But these are definitely on my watch list for next week as well. There might be some opportunities between today and tomorrow to trade them to the downside. They look good. They look really good. That's it, guys. Did you find that useful? What I wanted to show you was my rational approach to every single thing. Why I like it, where I would look to get in, what I need to see it to do to negate the trade, or to see it do to convince me that it's looking good. I want you to get into the habit of visualizing what should the market do if it's going to unfold in your favor. So in other words, if you're right, if your prediction is right, what are the kinds of things that the market would do that support going in your favor? And what are the things that would have to do to be a warning signal to you? And get into the habit of doing that, because that's what I do all the time. I'm like, okay, it's done that, it shouldn't have done that. And it's very rational. If the market does something it shouldn't really do out of character, then that in itself is a potential heads up. And if it does another thing out of character, then that's definitely a clue. You should get out the trade. If you're in profit or whatever, you should get out the trade. It can do something, a single thing out of character without meaning anything. It does it again, and it's something really odd, like a funny spike or something really odd, then you should consider exiting the position, because it's now done something odd twice. Cool. That's it. So I'm going to end the live stream, and obviously I believe these are accessible. They're still in the archive somewhere, so you can go through it again. And that's it. But I really enjoyed it. I'm going to go ahead and I'm going to get rid of that little logo thing in the top bottom right corner, and I'm also going to see if I can fix this resolution thing. And then I'll schedule it. Maybe we'll do it again tomorrow. Tomorrow I'm speaking at around the clock traders thing. So let me get that for you. You can register. It's free, and you can attend it if you want. And that's it. And then if I get a chance, I might do it. Cool. Some of those swing trade setups might be pretty cool. I might post this up, but I would have a look. End of day, I think there's some good stuff there. Potential end of day trades. And then they'll be done by this time next week. So if you are a swing trader, they might be the key to just doing 2 to 3% between now and next week. If you want to trade intraday, then we'll do the live stream stuff. But yeah, I think Tuesdays, Wednesdays, and Thursdays tend to offer a lot of opportunities. Mondays and Fridays are iffy. So there we go. I enjoyed it. That was pretty cool. Cool. All right, guys. That's it. Let me end this, and I'll see you online between now and then.